So RBNZ just made their latest announcement and ASB have increased their rates. What the heck is going on? Blandon here again, and in this video we are going to explore latest update on RBNZ, what does it all mean, why ASB have decided to increase their interest rates, and what this all means for property investors. Firstly, the Reserve Bank has announced that they are going to stop buying assets under the LSAP program. Inflation is now very visible and they're wanting to stop their stimulus. This is also a signal that they're unlikely to further reduce interest rates in the near future. Results of this, long-term yield of bonds are going to increase and along with interest rates. In simpler terms, they see that the economy is doing well and they're going to hold back on pumping more money into the economy. So interest rates got to come up and they want to encourage that people spend less and start saving more. Now meanwhile, ASB have increased all of their fixed rates by 0.3%, with the exception of 1-year rate and the 2-year rate increasing by a 0.36%. The ASB economist believes that the OCR hike could come as soon as August next month. Although skyrocketing house prices is a major contribution to this increase in rates, it's important to note that normally banks increase interest rate when they feel the economy is doing well or they have a positive outlook of what's coming. They see signs of inflation and the increase of prices in goods and services. This is especially noticeable in the building industry, with some raw materials going up faster than some of the cryptos that we have seen. Another major contributing factor to this would be the much lower than expected unemployment rate announced earlier in May. So for investors, with rates rising, should we be scared? Could this crash the house prices? Now, rates will be a definite major player in housing demand, not only for investors but first home buyers as well. However, building consents issued is record high. There are major articles talking about how this will meet the demand. Because the overall supply have increased dramatically, there will definitely be more affordable options coming up, and this will contribute to house prices slowing down slightly. So it's important for us to stick with our buying rules, be prudent and stick to them, making sure there's still a good safety of margin in every deal, i.e. buying well below market value or making sure that you increase the yield to compensate. Now the very interesting stat to note here is the net migration gain is just under 6,000 from the beginning of this year up till May. It's down from a whopping 87,000 from the previous 12 months. So there's a lot less people coming back and majority of them are just Kiwis sort of returning home. Although vaccines for COVID-19 has rolled out, people have been slow to adopt these vaccines. So borders opening, it's somewhat foreseeable, but we just don't know when. But we cannot ignore the fact that if the borders open up again, the net migration could increase dramatically. And I just can't imagine what this would do to house prices. So I do believe that interest rates have to stay high with the anticipation of this happening. And if you ask me, is it a good time to buy? It's always a good time to buy. It's more about what you buy and how you buy. So a quick summary for my property investors out there. Interest rate increase is inevitable. And considering tax deductibility being removed on a lot of the existing properties, cash flow management is going to play a crucial role moving forward, more than ever. And having a bit more revolving credit as a buffer might just be the backup plan you need. So if you learned something from this video, please smash the like button for the YouTube algorithm. If you want to learn more on how you can finance your next 3 properties, or if you want to learn how you can borrow or how you can never run out of servicing capacity, then check out the masterclass link in the description below. Until the next video, see you guys again.